Hello my fellow freedom builders and welcome back to the channel. Now I do apologize that I missed out on an update video in the weekend here. It got a bit crazy in the weekend, so I didn't get around to make a video. I'll just give you a very brief update today, and then of course there are some new swing trading candidates. I have 3 of them for you today, so let's have a quick look. First of all, the portfolio is basically the same as last week, just bouncing along here. I have 5 stocks, I think it is, in the portfolio. NVR, Lennar, Capital One, Cisco and Broadcom. One is just barely in break even, the others are in okay profit, so that is okay. We have a great Sharpe and Sortino ratio, and as I've said, we cannot really use these numbers for anything yet until we have had some more retracement in the market where we can start to see if I get out at the right time and the market just plummets, let's say 5 or 8%, and I might only have a drawdown of 2%. That will show us something about the sustainability of this approach. So right now we cannot do much about it here, but let's have a look at some of the companies that we are looking at this week. First of all, I can just run through the portfolio right now. There's Broadcom, as you can see, going straight up with this trend line here. Pre-market is also up, so that is great. We have the Capital One Finance here, also look good. Cisco had dropped a bit back here, but only to this support area, so I actually believe that is a fairly okay drop here. I don't expect much more, but of course I'll monitor it. Then we have the Lennar Corp going up nicely as well, and the NVR is moving up with this trend line as well. So let's see if they start breaking some trend lines or respecting them. That is the only thing. I'm not trying to guess anything here. I'm just following the chart and what it tells me. So first one we have a look at today is Cardinal Health. Now let's have a look at it over here in my stock scanner. And as always, there's a link to my stock scanner below. It's not public yet. It is very close to be. However, we have a few things we need to add before going public. But you can write up your email on a waiting list, and we'll notify you when it goes public. So, Cardinal Health here. Very strong stock score here. We have a PEG ratio, meaning the PE divided by the expected future growth at only 1.4. I do like that to be 2 or below, or just around 2. 2.2 is okay, 2.4 maybe, but not much more. 1.4, and at this with the 2.0, I'm talking about if I need to keep it a bit longer. I don't look too much at that in swing trades. However, I do like my stocks to be very healthy when I swing trade them. That gives me less of a risk for a negative surprise of anything. Price to free cash flow is very good here, and you can see returns on equity. And now that is because there have been some major shifts. We can also see here that earnings per share growth is basically gone here, and that is because when it's shifting between negative and positive, it's a bit of a mess, and there is 6.59 expected for the year here. All right, but it looks decent both with the Altman C, the Petrosky score, and analyst estimates here, and there have been some upgrades here in the estimate. So basically it looks good. There is a decent interest coverage, so they can pay the interest on their debt. If we look at the TPI chart, let's see, here it comes. Long-term green uptrend here, and then we dip into oversold accumulation phase here. So if we can get a decent green day, maybe today or tomorrow, that could definitely be a buy for the portfolio. The next one we have here is McKesson, and that is basically, if I just draw here, we have a big support area here, and we have just dropped down to that. Now this one I would be a bit careful of taking because the earnings are just around the corner here. When we look at the Cardinal Health, there's a bit further down the road here for the earnings, so there is room for some upswing before we get to the earnings. McKesson here, I'm not too sure. I would wait personally to get it after the earnings, but if you are a bit more of a risk taker, you can go for it here and hope for a big move upwards. If we look at it in the My Stock Scanner here, we can see, let's just have a quick look at the summary first. very solid again, 97 in the stock score, a low PEG ratio. We have some price to free cash flow that is decent. This one looks very good. We have the earnings per share growth. Now this is of course out of the chart, but that is because it's coming from a negative here and then going upwards. That makes these numbers a bit crazy. Free cash flow is amazing here. Interest coverage is also great. So basically we also have some estimates upgrades here. So overall this actually looks very good, but again, I will wait until after the earnings. Having a look at the TPI, it is in a long-term green zone, went into a good oversold accumulation here, but as you know, I'm looking for the green candle, so I might have taken, could have taken the green candle here Thursday, then we have Friday. If we get a good green candle today, it could be a buy, but again, I'll wait until after the earnings. Last one today is Delta Airlines here. And if you have a look at them, they have a very massive amount of tops over here. And I normally, if there's just a single top, I don't put too much attention to it. But here we have 4 of them, and it broke up. It returned to this one, and now we are over earning. So if we can get a good bounce up from this one, from this area, I would actually be very confident that this one could go up further. Let's just find it here. Delta Airlines. As you can see, good long-term uptrend here. We could have taken it down here, as you know, if you've seen some of my other videos, that I sometimes take it when it go all green on daily, weekly, and the long-term here. That could have been a very nice trade. I didn't, however. That's a bit annoying, but we get a good long upturn green trend here. And we get oversold accumulation on both weekly and daily, which could definitely indicate that with a good green day here, we have some upside as a swing trade. If we look at here, we have a stock score at 75. That is a bit in the lower end, but again, they were hit very badly under the coronavirus lockdown here. You can see right now they have earnings per share growth of 198. And they had 370 here, and that is because they came from this terrible 2020 year here, and then they have been climbing out of that hole ever since. Now they are a bit to the distress side on the Altman Z-score, and that is definitely something you should be aware of, but I don't see any immediate risk here. And of course, always remember just to check the news, Yahoo Finance, Google Finance, Seeking Alpha, and so on, to see if there's something really bad going on. But normally when I see a lot of buying in the analyst estimates and I see a lot of upgrades in the earnings per share estimates, that is normally because there are not too many dire signs just ahead. So overall, it actually looks good. As you can see here, interest coverage, they can only barely pay the interest on their debt, but that is again because it has been really bad. Before that, it actually looked very good from an airline here. So I think this could be a very decent swing trade, definitely from here, a good green day, and I could easily see myself taking, let's say we could get in around 46.50 here. That could be an easy 4, 5, 6, maybe even 7% upwards in the Delta Airlines. That's all for now. Remember that when you trade, do use your own risk management, your own methods, strategies, analysis. This is only for your inspiration. And as always, take care of yourself and your money out there, and I'll speak to you again shortly. Bye.